Good morning, grade 12. Time for lesson number 2 in foreign exchange markets, which is our discussion of balance of payments. So just to quickly recap from yesterday, we looked at the reasons why countries trade with each other, and that was because of a difference in prices. These difference in prices, as we know, can be attributed to different demand and supply reasons. And then we also looked at the effects of international trade. So why should countries trade with each other and what benefits do they get from that? So today we're having a look at an account called the balance of payments account. Now your balance of payments account is very similar to having a look at an individual company's cash flow statement. So where money's going out and where money's coming in. The balance of payments account has to be compiled in a certain way, just like our national accounts, and it is compiled according to the International Monetary Fund's Balance of Payments Manual. So please remember that just means that every country's balance of payments account is standardized, and that's obviously so that countries can compare their balance of payments accounts and create some value from doing the recording in the account. The balance of payments account also allows us to establish what sort of financial status the country is in, or what moves they might be making in the future. If our balance of payment account is constantly in a surplus, it would mean that we are able to expand our imports or import more goods from other countries than if our balance of payments account was in a deficit. If it's in a deficit, we're either going to have to attract a lot of foreign direct investment, or we'd have to take up more loans to balance out that deficit. So it's very important to have a look at this balance of payments account, not only individual items, but also as a whole. So our balance of payments account is divided into different sections. Where do they examine the balance of payments account? Mostly in your data response questions. So section B questions, they'll give you a section of the account and they will ask you questions about it. These questions can be calculations as well as information about the line items. So examined in a very similar way to your national accounts. The main accounts, your current account, your capital transfer account, your financial account, and then the unrecorded transactions. So I'm going to go ahead now and discuss each of these in detail for you. A recap on how we do the calculations. So I want to try and find, oh, there's the pen. Yes. So merchandise exports plus your net gold exports plus service receipts plus income receipts. You will then subtract your merchandise imports, subtract payments for services, subtract your income payments. Then you'll have to look here at the sign. In this case, it's negative. So you subtract, and that should give you your balance on the current account. Then another calculation that you need to be able to do is our trade balance, this last item. Now your trade balance is only your merchandise and the gold. So what you'll do is you'll use merchandise exports, add your net gold exports, and then subtract merchandise imports. So only those three amounts are involved in your trade balance calculation. So merchandise exports, add your net gold exports. Obviously, if that's negative, you'd subtract it, and then subtract your merchandise imports, and that will give you your trade balance. Okay. If they ask the current account, they always ask you how to calculate the trade balance, so make sure you know how to do that. So all in all, that is your current account. Moving on to the next account is your capital transfer account. A capital transfer account is the smallest account in the balance of payments, not really examined, but basically it's used to record any capital transfers. So any loans, any transfer of ownership of fixed assets, any debt write-offs, um, if there are people moving away from South Africa or moving into South Africa, all the transfer of their financial as well as physical assets, and then any financial claims and responsibilities of migrants. Then finally we have our financial account. It looks like a long account, but it's not that complicated. So please take note of the terminology first of all. So net incurrence is an inflow and net acquisition is considered an outflow. So you'll see under each main heading, net direct investment, net portfolio investment, net financial derivatives, net other investments, all of them have an incurrence and acquisition. So the incurrence under net direct investment, inflow is positive, outflow is negative. So what you basically need to understand is what these main headings mean, or what the main headings need to include. When they do ask about the financial account, they might give you examples like shares or fixed property and ask you where does that fall under. So that's what's important for you guys to understand. So I'm first going to explain to you what each subdivision is, and then I will explain to you how to do these calculations. So first of all, direct investments are known as foreign direct investment. So this includes any transactions where South African companies or non-South African companies gain or obtain a controlling share in a specific business. So if a South African company has gained a controlling share in a foreign company, it would be a net acquisition of financial assets. It's shown as a negative because that money is leaving South Africa, going to another country. Any country that's investing in South Africa will be shown as a net incurrence of liabilities, because essentially then we owe that other country the money. So it also includes investments in real estate. So foreign direct investment, which includes a controlling share in another business or in a foreign business, and then any investment in fixed assets. So a meaningful share of a business is considered as 10% or more. Then if we look at portfolio investments, portfolio investment is mostly looking at investments where people are looking to make money. So investments in shares, they're not looking to control the company, they're looking to make money off of this. So investments in shares, debt securities, bonds, equity, etc., futures, forwards, all of these, most of these transactions, the portfolio investments are carried out through our stock exchanges. So Johannesburg Stock Exchange, Tokyo Stock Exchange, New York Stock Exchange. They also call portfolio investment hot money. The reason for that is because of its liquidity. So it's easily bought or sold. It quickly changes hands. Okay, our financial derivatives account is any buying and selling of a financial instrument that's linked to another financial instrument. For example, trading in the value of interest rates, exchange rates, equity, credit risks. So hedging, speculation, etc. Our net other investments is the account for all the leftover items that don't fit into our direct investment, our portfolio investment, or our financial derivatives. So examples, trade credit, loans, foreign exchanges, or deposits. The last one we look at is reserve assets. So our reserve assets are what assets a country is holding in order to finance any issues it might experience with the balance of payments account. So examples of this are special drawings rights. Those are issued by the International Monetary Fund. Any gold or any other foreign reserves, so any money that's being held in foreign exchange, etc. Okay, so let's have a look at our first calculation we need to be able to do, which is the balance on the financial account. Okay, so the amounts you take into account are only the net amounts. So the negative 32942, positive 240,000, negative 13,000, negative 22,000, and negative 40,000. Those amounts are the net amounts on each of the sub-accounts. Obviously, when doing your maths, use the specific sign indicated in front of the amount. So, if you take all these amounts that I've circled and you do it on your calculator, you'll see that you'll get the balance on the financial account. If you look at this memo item, the balance, excluding reserve assets, the only thing we don't take into account is the reserve assets amount. So once again, it will be this amount, net portfolio investment, net financial derivatives, and now. There it is, and net other investment. That will give you this amount of 171,625. Okay, and then looking at the calculations of the sub-accounts, it's quite simple. To get to the amounts that I've circled in red, you're using the amounts below. So 32,876 minus 65,818 will give you the 32,942. So you're just working out the difference between the amounts shown below and the total is shown at the top. Net portfolio investments, this amount, 25,000. So if we look under our net portfolio investment, there are sub-accounts shown as well. The two main amounts that you should be concerned with, I'm going to highlight them, is net incurrence of liabilities and net acquisition of financial assets. So to get to the amount of 240,559, you're going to take 139,866. You're going to add 100,693. That will give you this amount. If we look at the following year, just to see how it differs if the sign is negative, you take 278,828, your net incurrence of liabilities. You subtract 58,894. That will give you 219,934. Then if we look at the calculations of the sub-accounts, I'll do it in a different color. In order to calculate the 139,866, you add the two amounts below. So 25,000 plus 114,000 will give you that amount. To get to the 100,693, you take 109,279 minus 8,586. So looking at the final year, just for clarity's sake, to get to this 90,000, we add up the two amounts below. So 32,000 plus 57,000. To get to the negative 56,000, we are adding these two amounts. Right, the net financial derivatives, again, the amounts below. So use the sign shown there, negative plus 485,000 will give you this amount. Again here, both of those are negative, so you can just add them together. It will give you the negative 22,000. Right, so that brings us to the end of the discussion of the balance of payments account, and then here is a example of what you might receive in a test or exam. So as I've explained before, it's a data response. They give you the amounts and they ask you to do the calculations or to explain certain things. So this is your homework for today.